On the other hand, I'm a much more of an impulsive buyer. I'm trying to change, but I still remain as an impulsive buyer.
One of us would like to just sit at home and read a book, while the other one is just always out and meeting people, as many people as possible.
And quite a few people actually even jokingly say that, can you please talk to my husband or can you please talk to my wife and make sure that.
Hello, folks, welcome to our channel.
A lot of people have been asking us either through the comment section or reaching out one-on-one through Instagram or emails or WhatsApps for that matter, and asking us this question that how did we do our journey together for this financial independence and also taking this big bold step of retiring early. And by how, they don't mean the corpus number, which is a different discussion, and a lot of people do ask this question also. It's about how did we align ourselves together in this journey. And quite a few people actually even jokingly say that, can you please talk to my husband or can you please talk to my wife and make sure that we also get aligned like you folks are.
So let's set the record straight. It's not that we were aligned from day one, or all our financial discussions have always been very cordial with no arguments.
Absolutely
I think
not.
that would have been too simple and also a bit boring.
Yeah.
So, in today's video, what we would like to cover is our financial journey and the challenges we face that we think typically most of the couples face,
Yeah.
and how did we manage those challenges.
So hopefully this video will give you some new insights. And before we do that, a humble request that in case you've not subscribed to the channel, because we still see that there is around 50% people who are subscribers and 50% who's watching are the non-subscribers. If you've not subscribed but you really like the content, please do subscribe. But more importantly, please do comment in the videos below, because not only we get to learn from you, but a lot of other people who are also watching the videos and interacting, they also can have that, like a community, feedback from all kinds of people. So let's get started. So the first one is the obvious one, which is acknowledging the differences. Like Seema said, that it was not just that we were aligned from the day one. We also had our fair share of differences, and we still do. And by the way, in this video, we are not going to be covering all kinds of differences, because we do have lots of other differences also. But we are focusing on financial differences, and financial in terms of the risk-taking ability, the mindset towards expenses, inflation, treating lifestyle, etc., etc. So if I just use some examples of our own differences, the first one is spending habits. So in spending habits, Seema, she is a lot more reserved when it comes to spending, because she takes a wise decision. She evaluates the options available for buying even a big expense item or even a smaller expense item. On the other hand, I'm a much more of an impulsive buyer. I'm trying to change, but I still remain as an impulsive buyer. And I keep spending, on an impulse. When it comes to investing habits, like in spending, Seema does a lot of research, but her research is that she'll go on her own, do all her research, while my investing habit is I'm not an impulsive investor, but I talk to a lot of people. I exchange thoughts, and even this channel has provided us an amazing platform to exchange those investing possibilities and tips, etc. When it comes to taking a loan, we also have even there our differences, where Seema has been a lot more reserved when it comes to taking a loan. The big loan in our case was the biggest, the mortgage, the house we bought, the first house we bought for ourselves. And we were at almost extreme ends of the spectrum, where Seema, she would have wanted that we take zero loan, and we, even if it meant that we were staying in a much smaller property, we would have done that. While I was on the other extreme end of the spectrum, that I was saying, why not do 100% loan, because the interest rates are low. But we did find some common grounds, etc., to put ourselves to align with these spending, investing, or loan taking habits.
Yeah, and I think how we did it is, first of all, the first step was acknowledging the differences.
Yeah.
So I think once you do that, or once we did that, we thought 50% of the work is done, because that's where you start. The second is, once you know that there are differences, then we started working towards those differences, that let's see where that person is coming from. So if I am very conscious spender, why am I like that? Is it only for major purchases or even for minor purchases? Is it for household things?
Yeah.
So we did over the years, and I think that's the third thing that we did, was to take it slow. It's not that we are trying to change each other and we are trying to go to from one extreme to another in just 1 year or few months. I think it has been a
Yeah.
journey over the years.
Yeah.
And once we have done these three steps, the fourth step is basically coming to a solution somewhere in between.
Yeah.
And sometimes it is financially viable solution, sometimes it is not. So you have to see, balance it out. So some decisions will definitely still have, let's say, those extremes, or will have those differences, but 80%, I think, what of our financial discussions or decisions now have been more or less aligned.
Yeah. And I think if I think back about it right now, that as Seema was mentioning that it happened over time, I realized that when we got married, we spent very little effort and time matching horoscopes. But after our marriage, these are the things that we really spent a lot of time matching. Our suggestion in that case, when it comes to acknowledging the differences, financial differences, is that make a long list of the small little items that could be the small little differences or big differences between yourself. It could be things like spending habits, it could be about lifestyle management, it could be about investing habits, risk taking appetite, understanding of the fire or the retirement early options, mortgage, loan taking. So there is a long list that you can make, and you can say that, okay, where do we stand? And there is no right or wrong answer. It's just that you have to acknowledge that these are the differences that we have as a couple, and what do we need to do about it. And what you need to do about it is the second point, and that is participate. Because once you've acknowledged, you may know that there are things that you agree to disagree, but how do you resolve them? Because that's how you'll be able to achieve financial independence, and that's how you will hopefully also think about retiring early. So that's what we did. We participated in a lot of those discussions together.
And just a word on participation here, because I have seen that when people think about participation, they think, oh, if we have to start understanding all the financial investments, we have to understand, or we need to know all the
Yeah.
jargon, the financial jargon, the keywords, and terminology and all that. I don't think so, or we don't think so.
Yeah.
I think what we need to understand is basically how it will impact. First of all, it's just an awareness. We need to be aware, we need to be informed. And then we are just looking at that how this could impact our financial discussions or decisions or financial goals,
Yeah.
right?
So, Seema used something which is you need to be informed. And that reminds me that, at workplace, we have these amazing frameworks that we get access to, but we never bring those frameworks at home and apply it in our personal lives.
We bring the work stress, but we
Yes.
don't bring those frameworks
Yeah,
home.
so exactly. You should keep the work stress out and get the amazing stuff that we learned. And one of the things that we learned during, and I used a lot during my career, was RACI. Some people call it Raki, some people call it RACI, but it is about the simple model of responsible, accountable, consulted, and informed. So whenever there was a project plan, whenever there was some role divisions within a team, we used to apply this RACI matrix, that who's going to be responsible for this, who's going to be accountable, who's going to be consulted, informed. And here, when you participate, applying that becomes a fantastic opportunity. To be very open, it's not that we both sat down and we made our Excel sheet RACI matrix. We did not do that. Organically, we started
Yeah, it
using that.
becomes over a period of
Yeah.
time. Yeah. I mean,
So,
and I think that comes from, because, like, as an example, if I give, like, when you were finding out all about this fire
yeah,
concept and my methodology, you were very interested in this 4% rule, withdrawal strategy,
sequence
sequence
of
of
returns,
returns.
exactly.
I was not interested. I mean, I was not trying to understand each and every term, but you informed me. You
Yeah,
said, oh, there's something like this. I said, okay, fine. If you understand
yeah,
it. Then, when I was doing trading, I
yeah,
was involved in trading, I was doing research on stocks, bonds, ETFs. You were not that much involved. You
yeah.
were more, okay, if you are telling me these things, that's fine. At least be aware of that. So that's, I think, the concept of
Yeah.
participation.
And that helped us a lot because we kind of divided and conquered. So, for example, when it came to investment philosophy, getting into each of the mutual funds or
Portfolio
specific portfolio
management.
management. So, Seema took the responsibility of being responsible and even accountable, while I was more consulted and informed that this is what's going on. When it came to the entire fire philosophy, I took the role of being responsible and accountable, and I spent a lot of time on the bucket strategy, emergency fund, and all that stuff that we talk about on this channel. And I kept informing Seema, and I kept consulting her that, look, this is what the percentage of the withdrawal rate that we are doing. So I had to first inform her what it is, then take her opinion, what do you think, etc. And it worked very well. So on a positive note, it worked very well because it helped us achieve the fire, or at least even retire early. But on a negative base, we've also seen people within our family and friends who were not keeping each other informed just because maybe one person thought that the other person doesn't need to know about financial things because I am the person who's handling everything. Or sometimes the other person just didn't care because she or he said that I don't want to even get into this detail. And what happened was that, unfortunately, for example, two of our very near and dear ones, they unfortunately passed away during COVID, and we could see their spouses struggling big time, and they both were well off. But it was just because the fact that they did not inform each other about their investments. They had never had those discussions. They had never even brought each other
They
to
had no
speed.
clue. They had
Yeah.
absolutely no clue on the financial
Yeah.
aspect. And after a few months, when you start digging out information, it becomes really
Yeah.
complex and going through all the processes. So yes, participation, not only to be doing the work, to be informed, but just to be aware. It's
Absolutely.
very, very
So it has
important.
a big positive benefit. Hopefully, we can be seen as an example for that, and it can also have a big negative impact. So try and be somewhere in between, or at least towards the positive side.
So let's assume that you have talked and you have acknowledged the differences. Let's assume that you have also talked and started participating in financial discussion. Now it is time for walk the talk. So that means you have to actually take now some specific actions, or actually, we took some specific actions to show our joint commitment
Yeah.
towards that financial planning. And one of the action, it could be simple, you can call it basic, but I've seen that it can also be hard,
Yeah.
is opening a joint account. Before we got together, we had our individual investments, individual accounts, and we maintained that for some time. But after a point of time, we started doing this joint investments from this account. So we contribute, or we just say that all our salary or income will go into this account, and all the
Yeah.
investment expenses will come out of this account.
In our case, it was pre mobile banking days. So the process was a bit cumbersome. We just go to the bank branch and take lots of documents and get through this bureaucracy, etc. So it was tough at that time. So, with whatever reason, maybe because of the process that it's difficult for you to open a joint account, or because of just the lack of trust, I would say very bluntly. At least it was a vital step for us, and it had a big benefit because we were able to see that how is our joint investments complementing each other. So, for example, had we put all our investments over the years in just the bucket three, would have been not the right thing to do. Or we have to put all 100% of our investments in stocks, not putting anything in bonds or fixed deposits. So having the transparency helped us on the investment part, but also helped us from an expenses perspective, because then we could say that, okay, how is our overall monthly discretionary, non-discretionary expenses happening? So do that step. It could be a big benefit for you. But as Seema said, it's a simple step, but it's a leap of faith that at least helps in taking. Now, on the other end of the spectrum, because that's how probably the first action of that walk the talk, as Seema said, that we took. But the other end of the spectrum is retiring early. Because if you see in fire, as a concept, it was really good. But had we not taken action, it would have been sochenge, karenge, dekhenge, all that we would have been asking ourselves. So we had to take that leap of faith somewhere, or a plunge towards retiring early. And it was very brave and courageous of Seema that in her early 40s, she decided that, look, I'm going to take a break, retire, see how it works. If it doesn't, I'll try and see if I can come back to the corporate world. And that action of hers had a tremendous impact or boost of confidence on our journey as a couple, that look, we can do it, because we could learn together that what are the lessons if you retire early, what are the things that we have to be careful about from an investment, financial, non-financial based
I think
perspective.
if I would summarize that experience, it started as a 1 year or 2 year
Yeah.
break, but it became an indefinite break. And if I summarize that experience, it's basically, it opened up that there were so many things that we were not even exploring.
Yeah.
There are, because we were so much into our corporate jobs, and we were
Yeah.
maybe two times in a year we were taking a holiday, but there were so many things like maybe running an NGO, maybe just doing some trading, maybe startup, maybe other things, mentoring, consulting. There are so
Yeah.
many things that can be done.
And as we've talked in, or I did a video just a few weeks back saying that, look, retirement doesn't mean that you stop working. It is just that you stop your active income and an active employment. So you still have some level of work. Even gardening is a different form of work. So those actions made a big impact because a simple action like joint account itself helped us to make that plan. And the complex or a bold action of retiring early boosted my confidence to be able to retire in the next couple of years. And that's what we did. So those actions are vital for taking together.
So, talking about retirement planning, in this case, though we were aligned more or less about the timing of retirement, but there were other differences like, where to retire, what would be our
Yeah, what are
lifestyle
we going to
during
do exactly?
retirement,
Yeah.
so on. And that's simply because we are two different personalities. We do have our individual interests, our,
Yeah.
activities, our passion. For example, one of us is a sports fanatic, and the other person is like just too much into world politics. One of us would like to just sit at home and read a book, while the other one is just always out and meeting people, as many people as possible. So, yes, those are the differences which came out when we started doing our retirement
Yeah.
planning.
And that fits in exactly with the framework that you have to acknowledge that there are differences. We also acknowledge that this is our personality differences. Then we have to say that, okay, if what can we do with these differences? And that is what we did in our retirement planning, saying that, okay, how can I also participate in all that sports interest? And that has also created a lot more interest with me, not just playing sports but watching sports. So you have to find those common grounds and then taking actions of finding these even new things that we
Yes.
wanted to do together. So for example, even hiking, we never knew before our retirement days that we will probably be so much in love with hiking, and it has been newfound joy for us. But on the other extreme end of the spectrum is that you don't need to, even during your retirement planning, align everything together. There are things that you give each other space, be it during a daytime or even during a year. You decide that for a couple of weeks a year, you're just going to let do your own solo things and the other person does their own solo things. So that all is part of the planning that we did. And the more we did it together, the benefit we got, because that is the reason that we've published in a couple of our videos the lists that we could come out with in terms of the drives we want to do, the travels we want to do, the courses we want to do, the things we want to learn. So the list is long enough that it can keep us busy for at least 15 to 20 years.
And I think it's a list which is very well divided into three categories. One is, as he said, participating in each other's interest. The
Yeah.
second is discovering new interest, both of us doing that together. And the third is giving each other space. So we have our individual activities. And I think that's the best framework to plan for your retirement activities.
Absolutely. So I hope that this 4 points that at least are part of our journey can help you. They sound very simple, but they have a big impact. So just by acknowledging, just by participating, just by walking the talk and doing this retirement planning, can make a big difference. If you guys are interested about our journey as a couple, that how did we meet, where did we meet, how did we go about,
The
etc.,
relationship
the
challenges.
relationship challenges, etc., happy to cover that in another video for that matter.
So I hope you found this video useful. And if there are other challenges or other activities that you are doing, please do share with us in the comment section. Not only with us, with the whole community, because it will help a lot of individuals and couples
Yeah.
to do their financial planning together. Till the next video, goodbye.